Hi, everyone, and welcome to this month's version of your Daily Five. I am your host, Mish Schneider, and I'm really excited about the segment we got going on today because as I woke up this morning and was watching the market, one of my favorite ag tech companies that had done nothing but sell off for the last several months exploded to the upside today, at one point being up over 40%. And it's in the ag tech space. And that really got me thinking about ag tech this morning, and also the fact that what it really is, and it actually, I believe, is a mega trend for the future. I don't think it's necessarily exploded on the scene yet, but essentially it's going to be so important, particularly as we start to see more and more issues around food, feeding people globally. Even we have a situation that just emerged in Cuba, where they're protesting the fact that there isn't enough to eat. And so this is really, I mean, what do we need more than anything, right? We need food. So what is ag tech? It's the application of technology to farming. So basically what it does is it takes whatever farming does and uses technology from the implementation of the seed to store, which basically is into the silos. So it does seed genomics, soil health, machinery, supply chain management, among other processes. So I picked a few stocks that I thought would be interesting for us to look at today. These are the symbols right here, but let's go immediately over to the StockCharts charts. Okay, so let's start with seed here. You can see that the day I'm talking to you right here, it just kind of exploded on the scene. And when I mentioned that this had had a pretty steady sell-off, really basically after it had peaked in February, it's done nothing but go down. This actually looked a little bit like a double top. So once it came all the way down like this, first of all, a couple of things to understand is this is called Origin. It's actually a Chinese company. If you notice, it's under the consumer staples food products. And I think that that's going to be an area in general, particularly if we get into inflationary environment, which I believe we will, and I've been mentioning the food-driven aspect of that. I think that consumer staples and food products is a good place to look in general, although I like to look mainly at the raw materials, the actual food commodities themselves. This, however, is an area that interests me a lot. So what's also interesting is that I did a stock charts last week on reversal patterns, and this was a classic reversal pattern. There is money to be made there. So you had a new 60+ day low. The next day it closed above the high of that day, which was at 824. It closed this day somewhere around 830. And of course, Friday was just sort of an inside day. That means it traded within the range it traded on Thursday. And we woke up on Monday to see this sort of explosion. At one point, it got up as high as 1311. So what we're going to be looking for now, of course, is for it to close above the 50-day moving average, which it hasn't done since March. And then you want two closes above. But if we look down here at real motion, this thing just got a tremendous boost in momentum clearing the 50. So that's a good sign. So momentum went up with this price rise. And you can see it's also now showing some leadership against the benchmark. So keep your eye on this one. Again, you're going to want to see two closes above 1072. And I wouldn't necessarily say to risk all the way down to under 7. I would probably say you could probably use around 8 or whatever this low was here, 772. But nonetheless, I'd keep my eyes here. And of course, then it would have to get through 200-day moving average. The other one that we haven't been in quite some time, but always keep an eye on, is AppHarvest. This one is in the United States. Now look at the actual sector is consumer discretionary durable household products. So the difference between seed as a staple and this is discretionary is important to note. And so I wouldn't necessarily be looking to get involved here, but this should be something on your radar. And again, reversal pattern, new 60+ day low. This was followed by an inside day, and then that exploded up, really going from like 12 all the way up to 20. Nice move. That's what we've been talking about. That's my whole reversal was last week about. So now we didn't quite get back down there, and you can see momentum is waning, and it's certainly not showing any leadership. Nonetheless, I would keep an eye on this. And if I'm just stepping back, forgetting about moving averages and just looking at pure chart patterns, it looks like if we take this low right here at 1530 and where the 50-day moving average is just slightly above, if we can clear back over that level, then you can do a much tighter risk to under this low 1386. I still think in the long run, even if it's not a consumer staple, that AppHarvest is working on some really exciting things, and you can go look up these companies. Another one is ConAgra Brands, and notice again, food staples, consumer staple food products, and once again, new 60+ day low and a confirmation the next day because it closed just slightly above the next day high, but it hasn't really gone anywhere yet. You had an initial pop here, not by very much. And of course, you can see we're up and down around this 200-day moving average. And we're under the zero line, though, in momentum and certainly showing declining leadership. So this is definitely not ready to do anything. What's also interesting is you had a double top here, didn't really go down very far. So I would think with this one, I'd kind of keep an eye on it, but I really won't be interested in this until we take out, see these tops back here? Happens to coincide with not only all this work we've done here, but it would definitely clear over that 50-day moving average. So I would say somewhere maybe over 3750 would what I'd be looking for here. And at that point, if that happens, of course, we would have a whole other different risk. Another one is IDEXX. And this is now under medical supplies. So they're doing other types of technology when it comes to ag tech, which is interesting. Obviously, we're looking at this just a little late because look at this one. This thing has just gone skyrocketing here. And even though we're having a decline in momentum near the highs, which would tell me not to buy it here, this is something, if it does get any kind of good correction down anywhere between 580 and 600, you might take a look at. But more importantly, if you look up this company, you'll see the type of stuff they're doing in ag tech, and it's very interesting. Next one is BG. And BG, this is another consumer staples food products, Bunge Ltd. And look at the momentum. It's starting to flatline here, which is good. So maybe the decline is over. Obviously, the leadership is poor. But again, new 60+ day low that we had last week, with a confirmation happening today, which gives you a very clear risk under 74.89. Now, I would probably say at this point, I'd want to see a little bit more proof that the momentum is going to hold. And that would probably mean that is getting involved, let's say over 80. Now, you would have the 50-day moving average to look at. So maybe in a case like this, what do I do when I'm buying on a 60-day reversal that clears congestion, but still under a major moving average? Is I buy half a position with my initial risk under this low. And then if it does eventually go on to clear the 50 and change phases back to bullish, I would add to the position, raising my stop on the first half so I don't lose on the first half, but then I have some risk on the second half. The next one is John Deere, and this is in the industrial commercial vehicles, but again, big into ag tech here. And once again, a new 60+ day low, inside day, confirmation yet the next day where it closed over this work right here. So this again had a good risk at that point. Now, of course, that's null and void. We can see here that the momentum is starting to improve over the Bollinger Band, but you're so close to the 50-day moving average at this point. This correction in a company like John Deere is good because now what we want to see is it break out over the 50-day moving average for 2 consecutive days. And then we would risk to the low of the day that it actually cleared the 50. And again, I'd keep my eye on momentum, but it's also starting to show a little bit of leadership here against the benchmark, which is interesting. Next one is EcoLab. Again, materials and specialty chemicals. So remember, this was everything from seed genomes all the way to the machinery. So that's why you're getting a cross section here of different sectors, which is great because it gives you an opportunity to really look at all different types of things. Now with EcoLab, this is just clearing the 200. And by the way, a new 60-day low here and reversal with a confirm the next day. Please watch my stock charts video from last week. I really go into depth about reversals, and it's an evergreen type of video. So at this point now, you have two choices. If it closes above this 200, you could take a small position with a tight stop, say under 211, or you can say, with the momentum not quite getting anywhere near the 200 and still below the 50, leadership is maybe see now if it can break out over all this work at 215 or 216, and then you can risk to under 211 still, because when you have a $200 stock, risking $5-6 is no big deal. If we go back a little bit in history here, you can see it ran into a lot of problems at 230, but again, remember now, this is something we're looking out for as an area that I believe, unless the whole market collapses, could be extremely exciting. And the last one, same kind of similar thing, as we saw before with IDEXX, is Zoetis Inc., ZTS. Now, again, so whatever these people are doing, these two companies in the pharmaceutical space with Agritech, I'd have to do more research on, apparently explosive. So you can see right here that this in the chart, in that it just took off and now is making new highs along with the momentum. Now, would I be necessarily chasing this? Again, it depends on your time frame, but you could say right here that 190 now really needs to hold. So if you get any kind of dip closer to 190, that might be an opportunity. Otherwise, just study this pattern. Look at this, another new 60+ day low that happened back here. That didn't confirm. Interesting. So remember, I said not always do they have to confirm. Do they always work when you get a new 60-day low and they don't confirm that's not the bottom? I like to look for the clean entry, but what I would have been looking at here is probably more when it cleared the 50 and the 200-day moving averages and we started to see the slopes turn up, the better opportunity was here. So these are just lessons in trading. Now, you don't want to see a range reversal in that it makes a new 60+ day high and dumps, but nonetheless, great example now with all the examples that we're mixed, but nonetheless, we're in a space that could turn out to be extremely exciting. So hopefully this was a good lesson for you, some to put on your radar, look ahead, and keep your eyes on the ag tech area. Thanks so much for watching, and bye for now.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.